Hey guys, welcome back to another edition of the Market Review. My name is Vasily, I'm your trading coach and professional forex trader. For today's weekly edition, I prepared for you a very interesting analysis on pound-dollar pair. I noticed that in the last videos we just discussed theory and theoretical lessons, and now it's time to show you how do we apply this theory in practice. On pound dollar, we will execute the multi-time frame analysis. We will make predictions just by the means of technical analysis, and I will show you how do we trade our predictions. And if you think that it is just enough for you to learn the technical analysis, and once you know how to predict the future market movements, you can easily trade them, no. It is a very hard thing to properly trade our predictions, and on pound dollar example I will show you how do we do that. So enjoy this lesson. I think it will be very interesting, so don't forget to like this video, don't forget to subscribe to this channel, and if you have any question, please leave them in the comment section. I reply to all your questions. So enjoy this video, guys. Alright guys, so we're gonna start with the daily time frame analysis, and here we always start with the trend analysis. We need to identify, are we bullish here or are we bearish here? So we on the daily right now are clearly bullish. How do we know that? Here is our current structure low, and from that we had a very nice movement to the upside, and the market here sets the high, right? Then the market from that point retraced. It retraced, and here we set the high low, right? And after this formation of the high low, the market bounced to the upside, and here we have the new higher close. Then the market retraced, and it looks like here we have the new high low. So clearly right now on the daily the market is locally bullish. The market is bullish, and just based on that we may say that it can easily go higher to higher structure levels. But then we shouldn't forget about the longer time frame perspective. On the longer time frame perspective, zooming out the chart, you can see that obviously right now pound dollar is bearish. Yes, we had a very strong impulse to the downside, retracement, next impulse, retracement, next bearish impulse, and each time new lower lows. Yes, new lower lows, the lower highs or retest of the lower highs. But you can see that the obviously on the long run pound dollar is very bearish, and now it looks like the market is in a correction cycle and the market is looking for some new low high to start the strong bearish movement from that point. And what I noticed analyzing the longer time frame perspective is this peculiar thing right here. So let's remove all this stuff, and I want to show you this points right here. Why do I like these points? Because just based on them we can draw the trend line. We can draw the trend line based on them, and you can see that it looks like the market is very close right now to this trend line. And you can see that just based on them, the market is already stopped. So if we analyze what happened with the market during the last 2 days, you can see that the market couldn't go higher for now. The market clearly stopped. And you know, it makes me think that here may be the potential continuation point, and maybe from that area right here the market may start the bearish movement to this current structure low, right? So it is just for now the minor thoughts. We just analyze the structure, we just analyze the trend, and we just trying to get what to expect from the market. Now what is very important for us to get where the market is standing at the moment, where it closed on Friday. And on Friday you can see that not only the market reached this trend line that we just discussed, we also can draw the horizontal line based on this candles right here, and you can see that on the left we obviously have a key level, we have a key daily structure, and you can see that just 2 times in the past we had a very strong movement from that level. Yes, and now on that level we see the sequence of 2 doji candles, and you can see that the candle close and the candle open are equal in these candles. And I know that many of you just short doji candles. You think that if the market formed the doji candle, it is immediately the selling signal. No, Doji candle is usually just the equilibrium. Indecision and equilibrium. The market reached some structure, the market reached some key level, and it just stopped because obviously for buyers it was the goal, and sellers start to sell from there, so the market kind of starts to, the buying and selling volumes started to be equal, and for that reason the market stopped. And with the dodges, the market can easily go higher. The market can just, after some consolidation, the market can just go higher. It happens very, very often. The point here is that the market stopped, and for that reason we should investigate what's happening on the lower time frame. We should check the reaction of the market. Lower time frame will show us how the market really acts there, how the market participants behaved in this area. And these details we can see only analyzing the lower time frame analysis. So you see, the daily time frame is just the first step. We see that the market reached the structure, we see that on the long run the trend is bearish, and now we see these dodges, so it makes us look for more clues, right? So now let's analyze the lower time frame. Alright guys, so now we are on the 4-hour chart, and obviously on 4-hour chart we just have more details. So this yellow is the area, our potential reversal zone that we have identified on the daily. And now we just check the price action on the 4-hour and see what's happening here. So on the 4-hour, let's once again analyze the price action. Here goes our bullish leg, then the market retraced. And from here we started the new bullish leg, right, with the higher close. Then we retraced once again, and then we continued higher. Yes, we continued higher, and here the market found its current structure high. So here we have our last high on the 4-hour. After that, the market retraced. And the market attempted to go higher. The market attempted to set the new higher close, but on the 4-hour it was rejected. Yes, we see this long wick right here, and clearly it is a very nice clue for us to consider, because clearly it looks like the selling pressure started to grow, and just because of that the market was rejected. One more thing that we may notice right here on the 4-hour is the wedge pattern. So here goes our rising support. Yes, we clearly see that this support was respected 1, 2, 3, 4 times. So clearly this is for now the confirmed structure support, right? And here goes our resistance. Yes, so clearly we have the rising wedge pattern, with the contraction within that. And it is a very, very, very important for us, because for now the boundaries of the wedge are the safest places for buyers to buy from. And obviously buyers buy blindly from the support of the wedge, because you can clearly see that it is for now historically proven to be the safest place to buy from. So why do we need that? Why do we need this wedge pattern, and how it helps us to trade pound dollar? Let me explain to you why. So as I told you, the last resort for buyers right now is the support of the wedge. And obviously, if our predictions are right, and if the structure that we have identified on the daily will be respected, then this wedge should be broken. Buyers should lose confidence in this rising wedge, and the market should clearly break that. So this will be our confirmation. As I told you, on the daily time frame, the doji is the indicator of the indecision, so we don't know exactly. But the breakout of the wedge will clarify for us the future direction of the market. So we will be looking for the violation of the wedge to the downside. And here goes the confirmation technique for the breakout, because it is not enough for us to let the market just break the support of the wedge. With breakout trading, I always want the horizontal structure to be broken. I am looking always for the last horizontal structure, support, and I want this horizontal structure to be broken as well. So for the breakout confirmation of this wedge, I want this horizontal support right here to be broken to the downside. I want the 4-hour candle close below that to confirm the violation of the wedge, and only then my analysis will be completed, and then it will turn to trading. Yes, so it is, all the steps that we discussed, it is the analysis, and these are the steps that we need to clarify the market future direction. And then when we identified all the needed conditions, like this breakout of the wedge to the downside, only then we can trade. Yes, so for now our setup here is still conditional. The market is still within the wedge, and it can just continue higher. Now we identified what do we need to trade, and now we can turn to trading. Yes, so let me explain to you how we will trade this setup. So the first thing to do, I think, is to place the alert. As you can see, I have the alert placed just below our horizontal structure support, and once the market will try to break that, I will be notified. And I will be waiting for the 4-hour candle close below this horizontal support for the confirmation of the breakout. Then once the market will close below that support, I will be looking for placing the sell limit order. And it's quite tricky where to place our sell limit order, because we have quite wide area right here. If we trade, I always trade, by the way, with the retest, and I will be looking for the safe area to catch the retest. Yes, so just imagine, if we violate our horizontal structure to the downside, we place the limit on the retest, and our reversal zone will be the area between our horizontal structure and broken support of the wedge. Yes, so this will be our potential reversal zone. So how do we pick the zone, where the level where we place our sell limit order? For that, I apply very simple technique. I just take the last bullish leg right here. Yes, here goes our last bullish leg over here, and I take the Fibonacci retracement. I take the Fib retracement and I look for 618 level. I look at 618 level and I just check if we have some confluence with the structure on the left, if we have some horizontal structure confirming the significance of the 618. And yes, we have. Obviously here the market respected the same level, so I will place my sell limit just on that level. It will be the perfect place for my entry in the trade, right? Where will be stop? And I think, it all depends on how risky you are or how conservative you are. I'm very, very conservative, and I will place my stop above this level right here, above this lower high. It will be just the safest spot for me to place the stop. So my position will look like that. Here will be my entry with the sell limit, and here will be my stop. Yes, here will be my stop, and with such stop placement I will feel the maximum protection, because I will be protected by this resistance, by the support of the wedge, and also by the horizontal structure right here. Where will be our targets? Once again, quite tricky right here. So we switch to the 4-hour chart. And on the 4-hour we just look for the closest strong structure. And I think this 125 level right here will be just a very nice initial target. You can see how many times in the past this level was respected, and I think it will be just the perfect level for us to place for the initial target. So we have almost 1.5 risk to reward right here for the initial target. So quite nice risk to reward, but it's obviously not enough for us. For the second target, we will aim at the lower level, and of course we will try to catch a strong bearish movement right here. So just with the initial target, we will close half of our position and we will break even our position, right? For the second target, I like the structure right here, the 23.5 level. Once again, we have very strong structure based on that level, strong for our structure, and I think it will be just the perfect second target for the trade. So the potential to make money here is huge. I think we can make around 3% just risking 1%. And here you can see that we need so many conditions. We need so many conditions to be met to be in that trade. We need a breakout. We need a retest. We need so many things, but you need to learn to follow the steps. You need to learn to follow the steps of the analysis. You need to learn to execute all that, because it is the only way to succeed in trading. And if someone tells you that, you just simply sell on spot or buy on spot and that's it and easy money comes, no, this is the complicated stuff. This is how it truly goes. And if someone says that it is much simpler than that, I think he probably lies to you. It is complicated no matter what strategy you trade. I know consistently profitable traders who trade just swing trading strategy, who trade just the daily time frame, and they all look for many different conditions. And these are the conditions that I am looking for. These are the conditions that I am looking for, and that proven for me to be very decent and solid. But you can look for your own, it is just how your trading strategy works. Yes, you look for what works for you and then you trade that. So here your plan for pound dollar. Of course you can change it. Of course you can modify it based on your own needs, based on your own psychology. I just show you my own way, and I truly hope that this analysis will help you a lot. And remember guys, because our setup is conditional here, if the market just respects the support of the wedge and just goes higher, setting you higher close within the wedge, we just don't trade at all. For us, the setup is cancelled, and we just forget about all these drawings, about all this trading plan that we have established right here. Yes, so on each pair, each financial instrument, you should do the same. You should do the same. It is the routine that we do, and after some years of trading, you will easily do it. Just 5 minutes of your time and you will see all that. So just keep practicing, keep working, and you will make it. Yes. Alright guys, so that's it. I hope that this analysis will play out, and I truly believe that pound dollar gonna drop next week, so I truly want to catch this selling rally there. So let's see how it goes. And if you want more such videos, if you want more trading plans, more explanation of trades, I have a lot in my educational group. So always text me if you want to see more. I will give you the instructions and the terms. So thank you for watching. Don't forget to like this video. Don't forget to subscribe to this channel. I really appreciate you for your time that you spend watching my videos. It looks like it makes sense to you. So thank you guys. Truly appreciate that. Good luck.